Hi, this is Wayne Zell, and welcome to Blueprint for Wealth, a fast-paced half hour of special topics and special guests that are designed to help you realize your personal dreams of wealth and freedom. Blueprint for Wealth is brought to you by Zell law firm located in Reston, Virginia and Savannah, Georgia, serving clients all across the country on matters involving estates and trusts, taxes, business planning, and fiduciary services. If you'd like to know more about Zell Law, visit us on the web at zelllaw.com. Today, we're going to have a special topic and a special guest. Today's special topic is focused on the choice of entity, which is a very important topic for anybody starting up a business or trying to figure out what the right type of entity is for your business. So today's special topic is choice of entity, but focusing on sole proprietorships. So we're going to learn a little bit more about what a sole proprietorship is and why it may or may not be the best choice for you. First, what is a sole proprietorship? It's referring to a business that's run and owned by one owner. There's only one owner in a sole proprietorship. If you have two or more people owning a business together, it's going to be treated at least as a partnership automatically. With a sole proprietorship, you still may need to register the business for certain purposes. For example, the requirements vary from state to state, but in Virginia, you may have to register the business for the so-called B-Poll tax, which is a gross receipts tax that every business, with few exceptions, pays in Virginia. You also may have to file for unemployment if you have employees, so you have to register the business as an employer. For federal purposes, you probably should get an employer ID number or taxpayer ID number for the business separate from your Social Security number. This will allow you to open bank accounts and do lots of things, including register the business for unemployment, federal unemployment tax. If you're operating the business under a fictitious name, if your name was Jim Jones, but you wanted to operate the business under, say, Jonesify, you would need to register that in the local jurisdiction where you're operating. And then, of course, if you want a special name that you want to protect for federal and state law purposes, you may want to get a trademark, but you may need a trademark attorney to help you with that. Sole proprietorships are treated as pass-through entities, if you will, for tax purposes, unless you elect special status. That means that all of your income and your expenses flow through and are reported on Schedule C on your tax return. That is typically a Form 1040 that you would file. The losses that are generated from the business activities, particularly in the early years, may be used to offset not only the revenue from the business, but other income that you earn. But you've got to be careful. You can't lose money forever as a sole proprietorship. And the reason is that the IRS may treat the business that you're calling a business as a hobby, and they may disallow the excess losses and not allow you to use them against other income. Any income that you generate, net income, from the business is going to be subject to self-employment tax as a sole proprietor. That's the equivalent of federal insurance contributions known as Social Security. But instead of you only paying Social Security for yourself, you're paying it as an employer, so it's generally twice the rate. And of course, if you've got income from self-employment and you've got net income from the business, you're going to have to start paying estimated taxes on special vouchers that are filed with the Internal Revenue Service on 1040 ES, as well as in your state of residence where you're working. These estimated taxes basically take the place of withholding taxes that you would normally generate. Now, sole proprietorships are rather risky ventures to be entering into. Why? Because the owner is personally liable for the business-related obligations and debts incurred while operating in a business. So what that means is if you fail to pay a supplier and the supplier gets a judgment against you and against your business, you have to pay out of your personal assets. Of course, insurance is always advisable when you're conducting a business, but can it fully protect you? Not always. Commercial insurance, for example, typically doesn't cover slip and fall business liability that might occur on your property. So you may need to make sure that you've got plenty of insurance, both commercial insurance and umbrella insurance, to cover your activities. It's always recommended to get plenty of insurance, but even with insurance, it may not be enough, and your insurance may have exclusions that aren't covered. So what do? You should incorporate. Incorporating means choosing between an LLC or a corporate form, a corporation, because those will afford you limited liability protection. Now, an interesting note, if you operate a business and you want your spouse involved, your spouse can be involved in the business without creating a partnership for tax purposes and therefore having to create an additional tax return on Form 1065. So the IRS has ruled that you can involve your spouse in the business without requiring them to be treated as an employee or as an owner of the business. It sort of goes against the general rule that someone who works in the business generally must be either an independent contractor, an employee, or an owner for purposes of operating the business. And in this way, if you involve your spouse and your spouse is willing to work for free, you can avoid record keeping that you would normally have to maintain and registration that you would normally have to maintain if the individual were treated as an employee. It also avoids additional self-employment tax that you would incur on treating the individual as an owner. So no partnership return is required in that instance. So that's a brief example of choice of entity involving a sole proprietorship. Usually we recommend against using a sole proprietorship. If you can, we would want to see you try to incorporate either as a limited liability company or a corporation. Future episodes of Blueprint for Wealth are going to deal with those types of entities, so stay tuned. And also stay tuned for our special guest who will be joining us momentarily. Thanks for watching Blueprint for Wealth.